So hello all, good evening. So welcome to this a video on candlestick psychology. So I'll be using today's market itself as example to convey this simple point of candlestick psychology and how it can be used to interpret the market sentiment. So this is today's Bank Nifty's chart. As you can see, this is today's price action, and this is yesterday's price action, right? So one simple thing which I want all of you to focus is, observe the yesterday's first candle, right? So yesterday's first candle in Bank Nifty is a massive, bearish candle with a strong body. So usually whenever there is, a very big bodied, a candle in a particular direction, it generally shows the aggressive selling which has taken place in that particular candle. And just think of it in simple sense that this a particular set of candle cannot be created by individuals. I mean retail participants. This can only be created by big institutions, that is FIIs and DIIs, who have a lot of money power in their hands. So this can only be created by institutions. That is first particular point. So now the point which I'm trying to convey is that yesterday, when the market happened, it gave this bearish tone at the opening itself, right? So and the market remained sell on rise yesterday because of this particular context. So whenever the market came, it was sold fiercely, right? You can see that selling again took place, right? And ultimately the market closed towards the end. So this was the opening point and this is the close point. So you can see the selling pressure prevalent. Now with this hindsight bias in mind, just look at what happened in today's market. So today's market opened exactly at the same place, but there is a change in sentiment, right? So there is a sentiment change which you are able to see through the candlestick formation. So here it was a very strong sell sentiment, right? But here you have the buy sentiment which the candlestick is trying to communicate, right? So why? I mean, this sell was very aggressive. In fact, the candle is pretty big here. If the same sentiment was there today, here also you should have seen a similar negative candle in formation, but that didn't happen because the sentiment has changed from sell to buy. This is what I want to convey through the candlestick psychology, that if the same sentiment were to remain today, then you could have seen a similar selling candle today, and the market would have gone towards the same direction, and in fact it will generally go to the same target. But that did not happen in today's market. And the post this the market just spent range. It protected its lows very importantly, and protecting its lows also is a sign of change in sentiment. That's also showing that the demand has changed. There's no more supply at this level, right? So it did a good consolidation at this level and gave a fierce breakout, again a standard breakout pattern. So here, what is that thing which is most crucial to take home from this breakout is not the consolidation breakout. That is the standard way in which breakout happens, consolidation and breakout. But the change in psychology, candlestick psychology, which was indicated in the first opening candle itself. So this, if you get the message from this particular candlestick reading, then you are already leaps ahead in getting the bias right for the day. So this is what I wanted to convey in reading the sentiment through candlestick psychology. And simple drawings which can be drawn to ascertain this is just draw the opening point here, right? So again, it is very relative. So from the yesterday's opening point, if people are shorting it, if they will be in profit when the price closes somewhere below it, right? So if the close is somewhere here, then it means that the position shorted position would be in profit. Now today's opening is somewhere here, and for this to be, assume that if this position has to be the same shorting sentiment, then the close has to be somewhere below this. for the sold position to be in profit. But now the price is just heading upside. In fact, there is no close below this level today. So in fact, price whenever it came here, it bounced. So again, this was the final bounce which took place, and the price just consolidated and gave a breakout. So this is the change in sentiment and the change in the psychology which of the market participants, which candlestick depicts in a beautiful way. That is why a candlestick chart is more revealing in itself than the other charts. It provides such an information. So this is what I wanted to convey in today's quick video, that the sell sentiment which was there yesterday at the opening, at the same, again the zones matter, it should happen at the same zone. The sell sentiment which was there at this zone was no more present at this particular zone. So this message, if is understood, then candlestick reading the market through the candlestick psychology becomes very simple and easy. So we can also look at the charts of Fin Nifty also. Today was Fin Nifty's expiry. So Fin Nifty also did, I think, something similar, right? So this was Fin Nifty's chart yesterday. You can see that yesterday there was a lot of selling pressure at this level, and price when it came towards that, again it was sold into, right, again confirming the selling pressure. But today, just look, the price opened somewhere here and it went up. So it is doing exactly the opposite thing what it was doing at the same level yesterday, right? So and it consolidated, and it ultimately gave a good breakout. So the point here is that knowing what the price is doing at the same levels, same zones, at the first instance it was a selling pressure, but at the second instance it's not the same selling pressure. Here the buying pressure is dominating. So it means that there is some change which has taken place, and once the price breaks out of this level, it is going in the opposite direction. So this is the point about candlestick psychology, which helps in getting the bias, setting the tone for the day. And just think in the reverse, that if the market had to go down, then first thing what it has to do is it has to first take out this bull power, right? Every candle represents bull power and bear power. So if it had to go down, like this first primary thing which had to happen is to take out this bull power by a bear candle. So that did not happen, and in fact it is not even able to come below, maybe if you have to roughly judge this, maybe 50 to 60% of the zone is this of this candle. It's not able to come down. So that itself is conveying some bull power which is being present here, contrary to the bear power which was existing yesterday. So this shows a contrast in the uh, psychology of the market participants, especially the institutional players, and then the market headed in the reverse direction. So this is about the topic of candlestick psychology in one sense, and how we can judge the market sentiment by reading such simple candlestick readings. So hope this was helpful, and especially today's market was a very good example to convey this point. We can go back and back test the chart. You will find such simple examples time and again. Hope it was helpful. Thank you.